Well, the stock market right now might be ignoring all warnings of a recession. According to our next guest, it's not the first time that's happened. Lori Calvasina is head of RBC's U.S. equity strategy. She joins us here on set. So this goes perfectly into the question that prompted you to write the note, and that is, has the stock market ever priced in a recession before it's happened?
Right, and we've been getting that questions from investors who are frankly, I think sort of feel like Dan, but are looking at the market action and saying, why are we higher? What's the bull case? And we kind of walk people through what we think the bull case is. And then people say, okay, fine, but we haven't even seen the recession start yet. So how can we possibly have priced it in? And look, we've gone back and said it would be, it would be odd, but there's some precedent for it if you go back and look at the history books. If you go all the way back to 1945, that was the recession coming out of World War II, stock market just marched through it. It's the only recession where it's essentially been ignored. And I think that there are a lot of differences between today and that time period, but there's some similarities as well.
So that's the only instance?
That's the only instance.
That's all you got?
Not convincing to me if it's one instance in such a long time period, and there are notable differences between that period and this period.
Well, I think what's interesting is people say, we've never done this. And I'm like, well, we've never done this, but we have done something kind of similar. And the thing that's similar is that you had this massive decline in the market ahead of it, about a 43% drop early on in the war. And actually, even after you had the mid-war bottom, you saw a 13% drawdown in 1943. The recession was not till 1945. And when I was researching this, I actually found some interesting terms that were similar. It was described as a technical recession, just being driven by the fact that the wartime economy was shutting down and we were pivoting to a peacetime economy. So this kind of idea of a manufactured recession that we were all talking about last year, you actually had it back then.
Also, COVID. I mean, what are we calling that, right?
Yeah,
I mean, that was so much like a war economy, if you think about it. And
yeah, but we threw $6 trillion at it, and that's why we had a rip-roaring market in 2021 and 2022. And look at what expected growth is. Look at where inflation has gone and likely to stay elevated relative to that. Look at what the prior 10 years that we had a GDP to the pandemic. We averaged 2.2%, and we're not likely to get meaningfully above that with higher prices, and rates are going to reset higher. So to me, I mean, I don't see anything about that comparison that makes any sense given where we are right now. And I think the pandemic really. Look at you. You're looking at me. Well, why are you looking at me like that? Why are you looking at me like that?
Yeah,
I mean,
when you do Oscar the Grouch.
I would add on the spending, though. If you go back again to this 1945 example, you had massive government resources that went to fuel the wartime machine, and that was pulled back in a hurry. We're kind of doing something similar this time around, both on the fiscal side and the monetary side. Also, unemployment managed to stay very strong back then, and that's kind of the other head scratcher in this environment. How in the world has it stayed so strong?
Yeah, but you don't really believe that. You're just playing devil's advocate right now, right?
Well, see, I actually think that we priced in a recession back at the October lows, but I think people are tired of hearing that, and I had to have something else to talk about, frankly. And it's just, the idea that people kept saying, well, we've never done this, we've never done this. It's like we've done something.
So why
similar.
would they have priced it in this time then? Because that may be right. In other words, and everyone's also saying, get me back to 3,600 on the S&P, and I'm a buyer with two hands, and I don't think they're going to be on the way down, if other than, well, Dan maybe, because he'll be covering a short.
There we go.
He'll be covering a short. But why would we have priced it in when, in fact, it's the same question? We haven't done this before. I hear you, and this time feels so different on so many different vectors. We haven't seen the Fed hike this aggressively. We haven't come out of a place where the economy was waking up. But again, why would we do that now?
Well, look, we did it back in October. And if you think about what was driving us to those October lows, it was, oh, my God, the Fed is tightening. It's all these big chunky hikes. We're going to have a recession. It was literally the Fed and fears of the Fed causing a recession that drove us to that point. The other thing we saw pretty clearly was over the summer, the small caps were baking in a recession. They were baking in an ISM down around 39 if you look at the manufacturing gauge, and valuations were literally at the rock bottom of the historical range. So if you look through that lens first, it makes a little bit more sense that the S&P just had to catch up to where the Russell was over the summer.